The August Consumer Price Index report is out this morning, and unfortunately, inflation is still rising. Both headline CPI and core CPI showed higher than expected increases July to August, and that does call into question how the Federal Reserve may act next week. The Federal Reserve meets next week on September 17th to announce whether they will cut interest rates or not. However, this rising rate of inflation does call into question how they may act and whether there is a full cycle of rate cuts coming or whether this may be a one and done. Ultimately, the Federal Reserve has very few appealing options, given the fact that the job market is clearly cooling. Concerns over stagflation, which are marked by weakening economic growth amid rising prices, something that we may very well be seeing today, is going to put the Fed in a difficult position about exactly how they may act and call into question how many rate cuts we may get in 2025 and into 2026. The Federal Reserve's dual mandate of stable prices and full employment is firmly at odds given the divergence in the way the economy is behaving. And ultimately, even if the Federal Reserve does cut interest rates in this upcoming September meeting, ultimately this will be a surrender to a weakening job market rather than a celebration of victory over inflation. For consumers, this report likely tells them something that they already know. Prices for a variety of goods and services have been going up and aren't likely to pause anytime soon. We're seeing travel costs, price of food, used cars and trucks, as well as shelter all going up. And this is something that probably is going to continue. And again, puts the Federal Reserve in a position where they don't have a lot of good options or a lot of places to turn to put the economy back on the right track.